it was Larry Kudlow, about a week ago. He does a press conference and he starts yammering on about the Exchange Stabilization Fund.
Yeah, and it's like, wait a minute, they're not supposed to be talking about that.
Nobody's talked about the Exchange Stabilization Fund in public for 50 years.
Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is Tuesday, March 31st, 2020. Have the very distinct honor and great pleasure of welcoming back a gentleman who has one of the most brilliant minds out there, and his analytics and statistical way of thinking is second to none. He is great. You know him, you love him, you've been following his work for years. Mr. Rob Kirby of Kirby Analytics. Rob, welcome back to the Daily Coin.
Pleasure to be with you again, Rory.
It has been way too long. I talked to Alistair a couple of days ago, and it had been 2.5 years since I spoke with him, and I think that's about how long it's been since I've last spoken with you. And the way that our world seems to be falling apart right now, it seemed like an opportune time to get to have a follow-up conversation with you about everything that we've discussed over the past decade. And I wanted to ask you, Rob, I wanted to start with what's on your mind. What has your undivided attention right now with everything that's going on? There's a lot to look at. And what are you focused in on at this moment?
The umbrella that I'm going to put things under, Rory, is that dystopia reigns supreme in our capital markets, and fundamentals don't seem to hold much water anymore. I sort of equate what's going on in our capital markets to the equivalence of dropping a plate and having it fall up. And in our capital markets today, things are falling up. We are seeing absolutely unexpected or not what you'd expect to see happening in light of unprecedented severe monetary debasement that's occurring with money printing. One would naturally expect the price of precious metals to be going up dramatically.
Yes.
And that has not occurred. And the reason for that is because our price discovery mechanisms, namely the paper price discovery mechanisms being the COMEX and the LBMA, where fictitious prices are established for gold and silver, where amounts of paper or futures gold and silver are traded that bear no resemblance or have no connection to the underlying amount of physical metal that comes out of the Earth's crust on an annual basis. The price discovery mechanisms are beyond broken. We are witnessing, for instance, on COMEX, in gold futures, we will typically see in a heavy volume day the amount of gold that comes out of the Earth's crust in an entire year can be sold in paper form in one trading session in New York on the COMEX exchange. And while that's occurring, equal or larger amounts of gold are being sold in London. So what this all means is that the price of the real metal that comes out of the ground has little connection to the overwhelming amount of paper promises of metal that are being sold in these, I just call them fake price discovery mechanisms. Right. I mean, the amount of real metal that comes out of the Earth's crust relative to the amount that's sold would be literally like standing on the side of a ship and peeing in the ocean. And the amount of pee that you could put in the ocean in one go would maybe be representative of the amount of physical metal that comes out of the Earth's crust in a year, and the ocean represents the amount of paper that is sold in fictitious markets that the lumpen are told represents real price discovery. And it isn't real price discovery. It's fictitious, it's hallucinogenic, it's dystopic, but that is what our capital markets have become. And Rory, this is allowed because we have regulators that do not regulate.
Well, they're not regulators. They're just
paid
actors.
shills.
Exactly.
Paid shills.
They're
Yeah,
paid
they
shills.
wear a badge. They wear a badge, and they are derelict in performing their duties completely, utterly.
If they weren't, then there would be a lot of people going to prison. There would be nonstop court cases going on with people like Jamie Dimon, Lloyd Blankfein, the so-called regulators over at the CFTC, the COMEX. All of these people it would be a nonstop parade. The DOJ currently is, in my opinion, is being derelict in their duties because they hinted, they said, they used the word RICO a few months ago, and nothing is happening. I mean, and it could be that what we're witnessing right now is, and maybe my tinfoil hat is a little tight, but some of this that's happening right now could be covering up for the fact that the DOJ did mention RICO, and more importantly, Rob, we were talking about this just a moment ago before we started recording, the ESF. The ESF fund has now been mentioned, which nobody ever talks about that. I mean, for goodness sakes. And what do you think about why is the ESF now being talked about on more than one occasion over the course of the past couple of weeks?
Well, the reason why the ESF is now coming into public view, in my view anyway, ESF has been a participant in this mayhem that's been occurring and has been an instigator of much of what seems dystopic in our capital markets from the get-go. They've been a player, a very serious player in the suppression of metals, in the I'm going to say the goosing of the stock market up, and the purchasing and monetization of U.S. government debt behind the curtain to keep rates artificially low. And much of that has transpired through the application of hideous amounts of interest rate derivatives, whereby the U.S. Treasury can make commercial banks and bank holding companies captive buyers of any amount of U.S. government debt they wish to issue. So that's been going on in spades for years. And the reason why we've had government officials like Lawrence Kudlow and Steve Mnuchin now utter the words ESF in public, which has never been done before by anyone from officialdom.
Right.
And my guesstimate on that is that the ESF's public footprint has probably become too visible, too big, given the monetary mayhem that we've been enduring in recent months, that they figured they must get out in front of this and mention the name ESF and try to frame the narrative that the ESF, yes, it exists, and B, that it has a legitimate function, as opposed to the covert function that has been performing behind the curtain for years now. So to me, it's try to get in front of it and try to deflect attention away from it, because its footprint has just become that big and is going to become bigger as time goes along. Because, you know, Rory, the ESF is the very likely destination of the missing 21 trillion that Catherine Fitz and Dr. Mark Skidmore reference and have documented.
I was going to ask you if that were the case.
if you're going to start having that missing money perform a more active, vigorous role, a more transparent role in the markets, you need to sort of, it's sort of like you got to plow the field before you plant the seed. And in the case of the ESF, if the ESF just suddenly bursts onto the scene that it's done this, that, and the other thing, and if it's of major size, it's going to raise eyebrows, justifiably. But I mean, if you plow the field first and get everybody ready for the fact that yes, this thing is going to become part of the lexicon. It's going to have a more public, transparent face, or at least a portion of it is going to have a more transparent public face. This way, when people like I say that the ESF has been engaged in nefarious activity in our capital markets, the powers that be can say, well, he's silly. He's being ridiculous. We told you that the ESF was going to be, that it performed a real function and it's needed. And it's the way of getting in front of it. But just to circle back, I wanted to just say, if just with regards to regulators and the laws of our land, if we really were a people of laws and a people of regulation and a people of probity, the biggest shortage on the planet would not be physical precious metal, which it seems to be right now. Honesty seems to be in short supply. But the biggest shortage, Rory, I do believe, would be in orange jumpsuits. Because yes. I don't think we can produce enough orange jumpsuits to supply us with the quantities that would be required for the perp walks that should be being undertaken right now by the likes of lawmakers, regulators, people who have shilled for the establishment, and these people are, disgusting in what they've done and what they have failed to do and the responsibilities that they have failed to carry out. And I just wanted to make sure I made mention of that.
Yeah, and that's an excellent point, because there's a lot. I mean, and from my perspective, Rob, what we see is, well, I've said for years, is that every member of the Federal Reserve System, every president, every vice president, every secretary of the Treasury, and all of their staff, every one of these people are guilty of counterfeiting according to the Constitution and the Coinage Act of 1792. 100% of them. And all of these people, every one of them since 1913, their names should be disgraced, and they should be brought up on charges of counterfeiting. And, Alexander Hamilton was pretty clear about the sentencing to be carried out against people that commit counterfeiting, and that it's right there. He made sure that it was in the Constitution. So,
Rory, may we live to see a day when we see the name Mnuchin emblazoned on the back of a orange jumpsuit.
That would be great. You mentioned you've talked about the metals you've been talking a little bit about that, and we have the COMEX doing some, who knows what they're doing over there. But you mentioned a break in the pricing mechanism, and I wrote an article a few months ago. It got picked up by Zero Hedge, so I was very pleased with this piece. But I talked about there's 6 new physical gold trading platforms that are either online currently or will be by no later than the first quarter of 2021. Do you see a shift from the COMEX to the Shanghai Gold Exchange, which all of these new gold trading platforms will be feeding off of? How do
You
you
know,
see that playing out?
well, what I see is going forward, Rory, is a uh, continued evidence of disparity between the criminals that are currently setting the price of precious metal. And what I'd like to specifically reference is we had an issue crop up last week where the difference between the fake price in London set by the LBMA differed from the fake price being set in New York. And of course, they tried to explain to us that the difference was that the contract size in London settles in 400-ounce bars and kilobars, while the North American market, the COMEX standard, they settle in 100-ounce bars. But the difference between the London price and the New York price, suffice to say, was $100 difference per ounce between the London price and the New York price. And I find this absolutely hilarious when things like this occur, because it shows how, like, basically it shows how, like, I mean, I equate it to kids in the schoolyard who can't agree on what the worth of a bubblegum trading card is worth. And one kid thinks it's worth this week's allowance, and the other kid thinks it's worth 8 weeks of allowance, and and they basically they're in a shouting match with each other about what the right price is. And I mean, when something that's as commoditized, with the amount of artificial gold that's traded in paper form being obscene relative to what the real underlying ounces are available, to think that these criminals can't get their act together to agree at a mutually agreeable false price. I mean, it makes a mockery of the whole thing.
Yes.
And to me, what it shows basically, I mean, I view this whole episode that occurred last week, to me, it's nothing short of COMEX defaulting, because they were unable to settle their contracts in their standard. And if you don't have 100-ounce bars to settle contracts, you shouldn't be selling contracts for 100 ounces.
Right.
Plain and simple. I mean, I can't sell a house I don't own.
There you go.
Frankly, I can't really sell. I mean, technically, I guess I can. I was going to say I can't sell a Bitcoin I don't own, but I guess you really can using futures now. But let's just say that market, so far anyway, is small enough that it's almost insignificant. But I can't sell a Renoir that I don't own. I can't sell a Van Gogh that I don't own. I can't sell an antique automobile or a collector automobile that I don't own. And isn't it interesting, Rory? There are no futures for Van Goghs. There are no futures for collector cars. And the prices of those rare commodities are seeing astronomical, record-breaking prices on a yearly basis, year in, year out, simply because there is no derivatives complex underlying them to desecrate or falsify their real values. And and if you want to wrap your head around what futures have done to metals and what futures do to anything where they exist, is they warp pricing, and they allow for let's just say predetermined outcomes or predetermined falsely set prices to exhibit themselves. Whereas in the fine arts, in the truly one-off rare artistic collectibles, you can't duplicate them, you can't falsify them, and you can't print them into existence. Um, and I mean, that's why fine art prices continue to go up, because things that can't be readily duplicated or falsified, they trade in the market based on their true scarcity. And you see, our problem with precious metals is that the futures market can't tell the difference between a physical ounce of gold and a promise or a paper promise of gold. They get priced in the futures market as one and the same. Whereas, you can't sell Van Goghs you don't own. You can't sell, collector cars you don't own. And you also can't really sell a house you don't own either.
Right.
Which is why real estate has maintained somewhat of a buoyance. But I suspect that all changes too in the very near future with developments that have occurred in the mortgage-backed securities market.
Yeah, I was going to say that. Go ahead.
Yeah. Well, last time I checked, there's a lot of people that are sitting at home right now not working.
A whole lot. Millions and millions and millions.
And a whole lot of those people, Rory, have mortgages.
Yep.
And a whole lot of those mortgages aren't going to be paid on a timely basis over the next few months. Which tells me, Rory, that mortgage-backed security paper very likely is hugely overvalued right now. And in my books, might be no better than a double B credit right now. But the Fed is valuing mortgage-backed paper through repo and through outright purchases. The Fed is valuing mortgage-backed securities on par with treasuries.
Oh, my goodness.
And the upshot of all that is that the mortgage-backed security market in residential is around 11 trillion. And in commercial, it's another 4 or 5 trillion. And basically the only buyer in the world for mortgage-backed paper right now is the Federal Reserve. And the Federal Reserve's current balance sheet is in excess of 5 trillion.
Yep.
And how much of that $16 trillion mortgage-backed security market is the Fed going to take down? Because there is no other buyer. And Fannie and Freddie cannot sell any of their inventory in the open market, because in the open market, it would probably fetch no better than double B pricing. And double B securities are trading 650 basis points over treasuries. But the Fed's valuing them at par with treasuries. And if mortgage-backed securities were to sell in the open market where the Fed wasn't present, and if they traded at 650 back of treasuries, that would mean that Fannie and Freddie would have to write down the entire inventory that they hold, which would render them absolutely bankrupt, insolvent.
And that's not going to happen. I mean,
so that means the Fed is the only buyer, and that means they own the mortgage market.
Right, which means they own all the homes.
So but that also means the implications for the Fed's balance sheet are staggering.
Well, which brings me back to what I'm looking at. Well, that's baked in the cake, I believe. I mean, and John Williams has proven that years and years ago. I mean, his timing's been a little bit off, but so what? Everybody else's has been too. Nobody ever dreamed of quantitative easing nonsense, 30 years ago or 20 years ago. Nobody ever heard of it because
Rory, what it really comes down to, people being off on the timing of the end of the world as we know it doesn't bother me so much.
Doesn't what?
People being off on their timing of the end of the world as we know it doesn't bother me so much.
No, it doesn't bother me in the least, because I'm kind of grateful, because it's kind of scary to a degree, to a large degree, And I think that people that have romanticized that are completely off their rocker and don't know what they're asking for or what they're looking
Oh, here,
at.
here.
And
Yeah, yeah.
what this brings me back to, Rob, and I don't mean to beat on this, but I think that it's really important because of what we are seeing right now with this complete disconnect in the precious metals market. We have the refineries are shut down, the largest in the world are shut down. The U.S. Mint just announced yesterday or the day before that they are going to shut down for a couple of weeks. They were already sold out of most of their products. The Royal Canadian Mint is sold out or shut down. The Royal Mint in the UK, Perth Mint, I heard a week or 10 days ago that they had sold out of gold, but they have their own refinery, and the UK Royal Mint has its own refinery, but they can only refine so much, and they're not set up for that large scale refinery like Randgold, who is not shut down, but they're running at less than 50% production. So you've got all this. This is to say nothing of the transportation that's completely shut down for the transportation of gold. Without they're using chartered flights at this point to move gold from point A to point B. So we have all of these breaks. We have the COMEX and their nonsense. We have the LBMA and their nonsense. And I once again go back to the Shanghai Gold Exchange, which is now an internationally recognized benchmark for setting the price of gold and silver. I think that we're going to see a shift to that over the coming next couple of years, maybe sooner. I don't know. I mean, because with all the games that these guys are playing, I mean, people have to be sick of it. Do you see a decoupling at this point from the physical and the paper? Do you see the Shanghai Gold Exchange playing a part and picking up on the what we're seeing in the market? I mean, I'm looking at the retail. I looked at AppMax a couple of days ago. They were getting 21.33 for a 1 ounce gold
Well,
buffalo.
well, I mean, listen, Rory, I think that the availability of physical metal is going to continue to be extremely tight.
For the rest of the year or just from now on?
I think easily for the rest of the year we
Okay.
could see very, very tight physical markets, and the degree to which money is being printed and the monetary stock is being debased. I would expect that the demand for physical metal is going to shift into a different gear altogether at some point, probably before the end of the year.
Okay.
So I would expect the tightness to remain in the physical markets, even if certain mints and refineries do come back online. But I mean, what has been going on in our real world? I mean, it was just yesterday that the U.S. Mint announced that they had a case of this COVID-19 in one of their employees, and that they announced their temporary
Yep.
shutdown.
Yeah, for 2
And I
weeks.
mean, so what do we see immediately on the back of that? We see the price of gold on the COMEX exchange slugged for $15 immediately after. I mean,
Oh my
it's sort of
goodness.
but you see, and this plays back into this dystopic um, circus that we've seen in our capital markets,
Okay.
where people who have the ability to print unlimited amounts of money or sell unlimited amounts of promises of gold when they don't have any physical metal to deliver are able to clobber the price in these false venues like COMEX. I mean, buying a COMEX future and standing for delivery is a waste of time because you won't get any metal. They
Right.
don't have any metal to sell.
There you go.
And so I mean, at what point do we say we don't need COMEX? Like, at what
Right.
point do people finally say we don't want to play in your sandbox? And I mean, globally, I think we see this occur where the world turns away from, and I mean, if if the real world doesn't get joy from turning their back on COMEX, my feeling is what will occur if they don't get joy in that regard, they will turn their back on the dollar, because gold settles in dollars so far, or up until now. And I can see the rest of the world taking it out on the the custodians of the dollar. I mean, ultimately, this is going to be taken out on America,
Right.
and Americans would be wise to be paying heed to what's going on and what is being perpetrated in their name, because this is absolutely and utterly insanely criminal. And to think that the rest of the world is going to put up with this indefinitely is ridiculous. I mean, Germany tried to do much the same thing with printing of their currency in the 1920s. And the scam lasted much longer than many people thought it would. And I mean, because people in the day could not imagine or conceive of the notion that the Reichsmark would be abandoned. But, it's not a good place to go to push it. And this, to me, is exactly what we are currently seeing. The actions being undertaken by the U.S. Treasury and the Federal Reserve acting in cahoots with them. These people are destroying the American currency unit. The world's reserve currency is, as far as I'm concerned, it's combusting in front of my eyes.
It's odd that anybody would take Federal Reserve notes at this point. I mean, the fact that the Federal Reserve has announced that they're going to, I mean, they'd already printed what, $1.5 trillion, $2 trillion, $3 trillion since September. And then they announced they're going to print another 2 trillion, 2.2 trillion. And then they announced that they're going to continue doing it's just, it's maddening. And so
well,
I can't understand why anybody outside the United States would ever accept a Federal Reserve note for anything at this point, in all honesty.
There's going to come a point, and I do believe in the very near future, where foreigners will say, if you want us to do trade with you, you're going to have to pay in something other than dollars. And when that occurs, my question is, do we get war? Or, I mean, my guess is we probably do get war, because I don't believe America has gold that they claim to have.
Right.
And I don't believe they have the ability to settle their international accounts on a net basis with gold. And America's current account deficit is so huge that even if they did have the gold they purport to have, a dramatically higher gold price would be required to give America any sort of let's just say, any kind of a runway to be able to shoulder the kind of trade deficits that they're currently experiencing. So the way forward and the future, unfortunately for people in the West, because we don't get away from it here in Canada either, because our dollar or our currency is a derivative of the US dollar. And the prospects for the US dollar, in light of the monetary debasement, and in spite of the dollar showing relative strength in recent weeks, the longer term prospects for the dollar, in light of the debasement that's occurring, unfortunately doesn't look very good. And unfortunately, living standards in the West are going to decline whether we like it or not, because too much money is being printed currently.
We're already
And this
seeing
is,
that. We're already
yeah.
seeing that in the form of homelessness. I mean, all you have to do is look at some of the major cities around the country. I mean, I know you see these reports, Rob, as far as, but people don't see it in the light that you just described. They don't see it in falling or declining quality of life, or um,
Well,
they don't see it.
Rory,
They don't see it in
Rory,
those terms.
the Fed's balance sheet just crossed into record territory at over 5 trillion.
Right.
And my question is, so does the dollar achieve universal rejection when the Fed's balance sheet crosses 10 trillion or 15 trillion or 20 trillion? Because that's the trajectory we're on.
It's
I mean,
incredible.
if they've spoken for the entire mortgage-backed security market, that would imply to me the Fed could ultimately end up with ownership of the entire mortgage-backed security market. Well, that's a $16 trillion item right there. And I mean, at what point does the chairman of the Federal Reserve put on a polka dot suit and a red nose?
There you go.
That's
I
my
don't know.
question.
I don't know. I mean, he should have did that on December 23rd, 1913, but he didn't. It's but here we are 107 years later dealing with it. It's
But that,
ridiculous.
but that, but that day is coming, Rory.
It is
Where,
coming.
and my feeling is he's probably already been fitted for that suit.
Well, I don't know where we go from here. I hope that people have mettle. I hope that they've made the proper preparations for things that seem to be unfolding right now. And I don't know how we're going to get out of it at this point. I didn't know how we were going to get out of it 10 years ago when I first entered into this, and I sure don't see it now because it's gotten so much worse than it was 10 years ago.
Yeah.
But
Well,
once again, these guys, they keep pulling rabbits out of the hat, and the world goes, well, okay, that works, and I just I don't get
there
it.
will come a day when it won't work. Yeah, there's going to come a day it won't work. And I guess not to use the cliche, but he says it very well. The words of Gerald Celente: "It's the 3 Gs that
Yep,
you've got to worry about: gold, grub, and a getaway plan."
exactly.
So, your gold is a good thing to own.
Yep.
Some grub in terms of storable food is a good idea. A getaway plan, I guess, and I guess there are 4 Gs because he likes to include guns too.
Yes.
So, because what good is gold and grub if you don't have a means to protect it?
There you go. That's exactly right. Well, we've been speaking with Mr. Rob Kirby, and you can find all of Rob's great work over at kirbyanalytics.com. Kirby, it's always a pleasure, and I hope that it's not another 2.5 years before we speak again, because I love talking to you. I think that you have one of the best voices and one of the best minds out there. So I appreciate all your time today.
Been my pleasure, Rory.
We will talk soon, my friend.
Okay, be good.